Alrighty guys, what is going up? I hope you guys are all having a great and amazing day today. Now in today's episode, we're going to be talking about why I just bought 39 shares of Home Depot stock. It was just over $10,000. So I hope you guys enjoy it, and if you guys get anything in value out of this video, make sure you guys smash the like button and subscribe to the channel if you aren't already. Also, you guys can go ahead and check out my course. It's $5. You guys will learn how to properly invest in stocks. We talk about fundamental technical analysis. We talk about how to find undervalued stock, how to retire. We talk about taxes. We talk about everything. It's $5. It's definitely worth it. Go ahead and check it down below. It's the first link. Check it down below. So now let's jump into it. Roll the intro. Let's go. So now there's a couple of reasons why I bought Home Depot stock. So let's start off with the fundamentals and then move to the technicals. Now the very first reason why I bought Home Depot stock was because during this time of uncertainty, Home Depot was doing extremely well. The stock has outperformed all the major indexes, not to mention their dividends are around $5 per year. So adding another 39 shares to my account, I get roughly another $180 of passive income. I know you might be saying, well, Carter, why did you spend $10,000 to only get, $180 of passive income? Well, let me tell you, over the past 10 years, Home Depot has slowly increased their dividends year after year after year. But maybe next year they pay a $7 dividend, then a $9 dividend, then a $12 dividend. Maybe they do a stock split and cut their stocks down. There is just a ton of potential for this position on growth and dividends. So it's honestly just a no-brainer for me. Also, the financials for this stock are amazing. They have around $14 billion in cash, which is extremely well. So if let's say Home Depot just shuts down and they don't make any money, they have around $14 billion to figure out what they want to do and continue to grow the company. Now they do have around $32 billion of long-term debt. When a company takes on long-term debt, it's fine. Companies like Apple, Amazon, Microsoft, they all have long-term debt. It's understanding that long-term debt helps grow the company. The only reason why you should get worried is when a company like Ford takes on long-term debt, because they have an ungodly amount of long-term debt already. So for them to pay it off, it's going to take a lot longer time, and it's just not worth the investment. So understand long-term debt is completely normal. Also, their margin rate is pretty healthy, around 9%. What that means is for every $100 Home Depot brings in, they profit around $9, which is extremely good for a retail store. If you compare it to Walmart, Walmart has a margin rate of around 1.5%. What that means is when every time Walmart brings in $100, they only profit around $1.50. So Home Depot is beating them in a lot of categories. Home Depot is just a superior stock. Also, the revenue is actually doing extremely well. Right now, during this time of uncertainty, people aren't able to go shopping and go out, but people are still going to Home Depot, let me tell you that, because their revenue is extremely good. This was an overall 23% increase, which is good, and it was around $38 billion, which is awesome. That is a lot of money, so that means Home Depot is extremely healthy. They're bringing in money, not too much long-term debt. They have a ton of cash on hand. What is their price to earnings? So really what a price to earnings does is it really tells you if a stock is overvalued, undervalued, if this is a strictly growth stock. What I always look for is stocks that have a price to earnings under 30. So now Home Depot has a price to earnings right at 25. So it's not overvalued, it's not undervalued, it's still a company that can grow, it's still a company that can pay dividends. It's just a perfect long-term stock, and I'm super happy. Now, when evaluating a stock, there are thousands of different ways that you can look and value stocks, but here's some little tips. Look at competitors. Home Depot's main competitor is Lowe's, which overall, Home Depot does have better financials than Lowe's, even though Lowe's may pay a little better dividend. Home Depot has more of a growth and a long-term approach, where Lowe's is more of a value stock. Also, another cool thing to look at is how good do they treat their employees? Do they offer 401ks? Do they offer retirement, paid time off? Is it rated one of the best places to work at? The reason why I'd like to think this way is because when you have happy and healthy employees, often you will have more revenue because the employees come in happy, motivated, and ready to work. If you have a company that treats their employees like crap, often you don't make as much money. So it's always super important to look at Is it a good place to work? And let me tell you, Home Depot is rated one of the best places to work in the United States. They offer a ton of bonuses, stock bonuses, paid time off, 401k match, and that's always really, really good to see. So now Home Depot's balance sheet looks great. Now let's go ahead and look at the technicals like support, resistance, fair value point. Did I get into high? What are you guys' thoughts? Make sure you guys comment them down below. So now let's go look at the technicals. Let's go. Bam. Alrighty guys, so we have ticker symbol HD. That is Home Depot stock ticker. So if you guys want to look it up to buy it or do research, that is the ticker. You guys can see that this stock here was trading right before the whole recession hit, fell and hit lows at around $140 per share. Got immediate buying pressure, broke highs here, and then continued to rally up here, hitting highs at almost $300 at $292. Sold off here to around $2 or $279. So now when looking at this stock here in this chart, you may be very overwhelmed, but let's break down some support, resistance, and everything you guys need to understand. So highs, that is often considered a resistance. So this is just when we have a temporary sell-off. So here you guys can see it had some temporary sell-off to this price point. Now also mark out all of the highs here. You guys can see that there is a high right here, a high right here. So now those are considered resistance. But when a stock is above those resistance lines, often those old resistance turn to new support for this stock. So now support is when we just get buying pressure. So we can see buying pressure right in here. We can see buying pressure right in here because it dipped up. We can see buying pressure right in here. So right now I do think there is some pretty strong support at this $263 mark. The reason why I say that is for a couple of reasons. You guys can see that it does have buying pressure right in here. So we did get that little doji, which is that reversal candle. So now it hit that price point, bought up, hit it again, and got bought up again. So now another thing to consider, if you look extremely close, you can see this red line here. This red line is considered a 90-day moving average line. What that means is it takes the past 90 days as closing prices and it merges them together to form this line. This line is often used as a trend indicator, so you can look at it and instantly know what the trend is. So now when a stock is above it, you guys can see that it tends to use it as support. So it came in contact with it right here and got bought up. So now we're in the process of this stock getting bought up. So there is some old resistance here at around 287. So right now the stock has a possible room from around that 279 mark to that 285 area. So now there's that nice little window, but for it to fall back down to support here, it'd have to go back down to 263. So I am already averaged in with my position here, but I think it's always smart to set some alerts at these old support lines because you always want to get notified when a stock is at a fair value price. That is what I considered fair value for this stock. I think that there is a ton of potential with this one. I think that we could see the stock breaking over $300 and hitting around $315 either by early next year or late this year. And I honestly think getting into this position just for the dividends by itself is perfect. This stock has outperformed all of the major indexes, and I think it's just a perfect long-term stock to not have to check day to day and not really have to worry about. So that is it though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. Go ahead and check out my course. It's $5. Make sure you guys check it out. Let me know what you guys think. Also, make sure you guys smash the like button. We'll see you guys tomorrow. Hope you guys enjoyed it. Remember to stay happy, stay positive, and overall, stay safe out there. We'll see you guys tomorrow. Take care. Bam.